This is probably one of the best indications where Bitcoin is going. Is it high? Is it low? This is not one model. This is a combination of many statistical models. It peaks close to 100 when we are at the peak of the Bitcoin cycle. It's close to 0 when we are at the bottom. Now, it's not perfect, as in it doesn't always reach the absolute extremes at every cycle. So for example, with the recent peak, when Bitcoin was close to 120K, this combined indicator gave 94. Still, it's probably one of the most accurate measures, and it's published by Colin Talks Crypto. Unfortunately, he doesn't publish that many videos anymore. His last one was published 1 month ago. The one prior to that was 4 months ago. But this indicator, I believe, is quite interesting. It's a combination of the following sub-indicators. Now, we're not going through every one of those indicators, but the center question for this video is there a good chance that this CBBI is going close to those low levels again? So a CBBI of 6 or a CBBI of even 4, is that realistic given that currently we are at 32? Now, to answer that question, let's have a look at the subcomponents of that indicator that are currently very high. So the Puel multiple is high, the realized hodl ratio is high, the 2-year moving average is high, the pi cycle top indicator is high, and the realized to unrealized profit and loss ratio is high. If those numbers are expected to go down, then the CBBI in aggregate should also get closer to 0. So let's have a look at those sub-indicators. And let's start off with the Puel multiple. So that's this chart over here. It shows how much Bitcoin miners are currently making. When Bitcoin miners are very profitable, then we tend to be at the peak. When they are forced to sell because they're not making much money relative to historic prices, then we are in the green, and we want to be in the green. Now currently that is at 0.65 and the green level is at 0.5. Overall the trend is down and it's declining already since Bitcoin is at 72K. So the market has been losing momentum already before it peaked in the price. I think there's a very good case to be made that the Puel multiple is likely going to further decline. So this 71% reading is likely going to go down as well, which will then decrease the value on the aggregate index. Now here we've got the 2-year moving average. Another one of those higher marked contributors to the CBBI aggregate index. When we are deep in the green, so when the current price is below the 2-year moving average, that's when we want to buy. We are already in the green, but not as deep as we used to be in the past. And that's why the aggregate number is still relatively high. Still, if Bitcoin sees another sell-off and we continue this bear market just for a few more months, then this number will also dramatically go down, and then the aggregate index will print lower values, giving us a potential buying signal. Now, no model is perfect, but some models are useful. And this aggregate indicator is just trying to find a useful combination of models that historically predicted bottoms and tops quite well. Now, this is not the first time that we talk about the realized hodl ratio. The realized hodl ratio looks at the trading activity of the short-term wallets versus the long-term wallets. As in, when many short-term traders are currently trading on the Bitcoin chain, we see this indicator going up. That means that the market is heated, right? It's just the short-term tourists that currently use the chain. When this indicator is very low, it means that only the long-term traders are interacting with the chain. There's no excitement around Bitcoin at all. And again, we see how this indicator tends to trend down, and it already started to trend down when Bitcoin was at 100K. The trend is pretty clear. I'd be very surprised that if in a few months from now that would suddenly turn around. I think we are just on the way to enter the green area again. The market is still cooling off. I believe this bear market very likely has not yet ended, but in a few months things might look much brighter again. Now let's have a look at the pi cycle top indicator. That's over here. Now, what is this? It's the 111-day moving average and 2 times the 350-day moving average. Now, the ratio, that's roughly pi. And that's why it's called the pi cycle top indicator. It's a momentum indicator. When the market heats up enough, then the shorter term moving average crosses the longer term moving average. And that's when historically we saw a price peak. Technically, it's not an indicator to find price bottoms. It's an indicator to find price tops. Now, the interesting thing about the indicator is that while the data was fitted for the prior tops, it was not fitted for 2021. And it predicted that top quite well too, within just a few days of when the actual top happened. Now, currently, of course, we are very far away from any cycle top because we are currently in a bear market, but we are using this now in the exact opposite way, as in how much distance do we have of the short-term moving average to the long-term moving average. Again, we need another wave of sell-off in order for that to further expand and to bring the pi cycle top indicator further down. In other words, I don't think that the end of this bear market is just a continuation of the sidewards trading range that we have seen in Bitcoin over the last weeks. I think there will be another wave of negativity, of bearishness, and of selling. And one of the main reasons why I think so is because since October of last year, we don't see any money flowing into the space anymore. And in the last weeks, we even see outflows. So the stablecoin market cap is going down, and that's very likely going to be bad for crypto prices as well. When there's money flowing in, when the stablecoin market cap is going up, that's also when Bitcoin tends to go up. When there are outflows, Bitcoin tends to go down. We want to be in the market when money flows in, and currently that's not the case. We should still be cautious. If there's still outflows and people are moving from stable coins into fiat currency, then how can we expect higher prices? We need more capital in the space in order to achieve new all-time highs. As long as money is flowing out, prices are likely going to continue to decline. And what I like about the stablecoin market cap is just that it shows the trend quite clean without too much volatility. Prices are much more volatile. The stablecoin market cap is much less volatile, and it shows the trend still very accurately, right? Once we stopped seeing inflows, that's exactly when Bitcoin peaked. And given that now we see outflows, I expect that Bitcoin will see another sell-off, another crash, another correction of maybe 30% or so, something that we have seen repeatedly during this bear market over the last months already. Now let's have a look at the net unrealized profit and loss as well. Again, this tends to move in the negatives at the end of a bear market, and we are not yet there. And the reason why I believe that we have to get into the negatives is because that's what the psychological anchor point of the market is, right? If you are currently in profit in Bitcoin still, even after the decline, you might consider to take that profit. But if you are long-term bullish on Bitcoin and you're currently in net unrealized losses, you just might want to wait it out. Right? When you buy a house, you're not going to sell that house for a lower price if you don't have to. You just wait until the housing market turns around. It's very similar for Bitcoin. If you don't have to sell your Bitcoin and you believe that long term it will appreciate because it doesn't expand its supply as quickly as fiat currency, and of course you just hold on until a new all-time high forms. And so when the market in aggregate is in net unrealized losses, we tend to see less selling pressure. And that's when we tend to see an end of the bear market. But currently we are not yet there. But I do think that this part of the CBBI will also fall. And so I would be extremely surprised if the CBBI over the next weeks won't fall further. And only once we hit 20, 10 or even single digit numbers does it make sense to get very aggressive in dollar cost averaging. We can already buy right now if our time horizon is 5 years or 10 years. But if we are buying right now, we have to be prepared that the next months still might be ugly. It all depends on your time horizon, and it depends on your alternatives. I do think that Bitcoin is now a better risk on asset compared to, say, technology stocks, because Bitcoin has already come down and technology stocks are still comparatively high. For all the tech stocks outside of Korea, But that doesn't mean just because Bitcoin doesn't fall as much as the Nasdaq 100, that it's the greatest investment right now. Right? It just depends on what's the time horizon. Short term, anything is possible. Long term, I do believe that Bitcoin will hit an all-time high at some point. The only question is when. This bear market will see a reflection point. And of course, it always is very hard to buy in a bear market because nobody wants to buy. Because if everybody wanted to buy, the price would be higher. Right? It's always a contrarian bet. When we buy, when prices are low, nobody else wants to be in the asset, and everybody tells us that we are stupid to still believe in Bitcoin until the recovery happens. And then everybody tells us how lucky we got. It's always the same. But that's the game, right? It's the minority of investors that outperform, the vast majority underperforms. And by nature, we have to do the opposite of what most others do. And if we are right when most others are wrong, that's then when we achieve superior returns. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out the premium membership. This is where I share my own trades. This is where you can also co-invest alongside with me on automatic trading. So feel free to check that out. There's also a 7-day money back guarantee in premium. Link again is over here. See you next time. Cheers.